Hey everybody, Jim Ingersoll here with the Real Estate Success Podcast, hanging out with a longer-term friend of mine, Clay Balcom from Advanta IRA, and we're going to help you guys connect the dot on some investment deal flow on how to do your first deal. But then a lot of times people sort of stall out because that first deal is the catalyst to get you into a self-directed IRA, and when that's over, the money just sort of sits there. So we're going to talk through some concepts and ideas on how to go from that first deal to the second to the third, the fifth, and the 10th, and keep that money earning. Because with compound interest, you want it earning. And anytime you got like dead space in between your investments, you're not earning anything. We want to eliminate that gap for you today. And we're also going to talk through the reality that unfortunately, we're up near 25 million people have lost their jobs over the last month or two. And that's very, very sad. We have a lot of empathy for that. But with that creates a lot of opportunity for people to figure out what they want to do with their, what I call a stranded 401k from corporate America, because now might be a great time to consider switching it over to somebody like Advanta and get that earning in something that you're really good at. So Clay, welcome to Real Estate Success today.
Thanks, Jim. It's good to be here. It's good to see you again.
Yeah, you too. It's been a little while, and you're back in Atlanta, right?
I am. I grew up here and very happy to be back in town. It's changed a lot. You, you leave a growing city like this and you come back and things have changed. So it's really been fun to be back.
How long were you away from Atlanta?
A few decades, actually.
Wow.
Yes.
That's a long time.
Yes, it is. I visit here a lot. Obviously, I have family here and so on and so forth. So it wasn't a complete surprise to me, but goodness gracious, growing city.
And now you do business development at Advanta, right?
Yes, absolutely. Advanta is based in Florida, but we've had an Atlanta office here for many years. And, it's great that I was able to tie in my place of growing up with a new business opportunity. So really delighted to be here.
Really neat. So what are the top things that you love about Advanta off the top of your head? Putting you on the spot here a little bit.
Sure, absolutely. Well, their customer service, I've had experience with several companies. It's really second to none. And I think that a lot of that has to do with two things. One is they concentrate on it, or we concentrate on it. Both the people like myself in business development that help people think through their concepts or run a scenario past me. And I say, well, have you considered this in terms of the rules of the account, things like that. But also the business structure. Having an account manager that you can always go to, as well as an education source person like myself that you can always go to, I think really makes all the difference, especially what we're going to talk about today in terms of having your account always being earning. So having an idea of what to do next and being able to run that idea past somebody. What do I need to look for? Hey, can you help me keep this deal moving? So on and so forth. So I think that it all kind of ties together, but the customer service and the speed of transactions here is it's excellent.
So that is really critical, and that is a big differentiator, because I've had some of the unpleasant experiences with like equity trust in the past, for instance, not to name names, but it's difficult. So I think that focus in helping people is a great focus. So I think that is really, really good. So what is a typical first investment for somebody with a self-directed IRA look like? Is it typically like private money lending, or is it somebody who wants to buy an asset, or what do you typically see?
Yeah, I'm not sure that the asset itself is typical, but usually what it is somebody is out, looking for investments. It's often with their personal money, and they've found something that they're really excited about, whether that is, making a loan, or buying a single-family residential rental, whatever that is, or if they've had some success with an investment, and then they find out their IRA money can do that, virtually that same thing, that really starts to get them into it. So it's usually something that's familiar to them,
Mm-hmm.
Or their financial team. I mean, listen, most people don't do this kind of investing in a vacuum, right? You bring your real estate team, you bring your financial team, your coach, all those kinds of things can help you develop how you're going to deploy this money. But so, maybe the asset type is not terribly typical, but the scenario usually is, hey, it's something that I've already done or I'm familiar with, or my financial team is telling me is a good idea to get into this at this particular time. And I can do it with my IRA money. So they combine the knowledge of and excitement of a particular investment with the tax advantages of the account, and away they go.
So let's go through the scenario of a private money loan. So like a typical private money loan might be like a 12-month loan. And it may only go 6 or 8 months. So they would earn, say, 10% interest in 1 point. And that's a really great investment. It pays off, and then all that money goes back to the Advanta account. And then people sort of get stranded on trying to connect the dot to the next deal.
That can often happen,
There's a
yes.
gap. There can be a gap there with no earnings.
Right. And the gap is an interesting thing conceptually too. I think that the idea is to start to build a habit of looking for the next deal, or just kind of being aware of what the marketplace is doing and where your next opportunity could be. So the hurdle, if there is one, to kind of get into self-directed IRAs, once that's cleared, I think that begins the time when a person should think about, okay, well, when does this deal that I'm in pay off? It could be long-term, that could be decades from now, or it could be less than a year. So that is also part of the strategy that everybody, I think, would be cognizant of in terms of IRAs, in terms of, how old am I? Am I over 59 and a half, younger than 59 and a half? Do I need cash flow? Do I not? There's all kinds of factors that go into those investment decisions, but certainly when it pays off and when I need to start thinking about how to redeploy the money is a big one. So I would say that a couple of months at least before the fruition, the end point of whatever the investment is, it's a great time to start thinking about, okay, well, what is this money going to do next? And there's lots of resources for that. But sometimes people aren't really familiar with them. Mastermind groups, online, real estate investment groups. It really is about talking to people about investments and what they've done and things like that. It's very common for me to see somebody who, let's say they did a real estate syndication deal, was their first deal.
Okay.
And then let's say it was an apartment building or something like that, and they get out of it for one reason or another. It's very common for me to see that they've been at a real estate investing group, and all of a sudden now they want to be a lender, right? So a different kind of structure for their real estate investment, and that's really where I think where it starts to flow. The person starts to be connected with the investment community, and they're thinking ahead, and then at that point, it really becomes that scenario where the money compounds as fast as it can.
All right, so that's a great scenario. So a lot of people do come in and they hook up with the syndicator, and that goes for a while, and then the syndicator, in the best case scenario, will refi the property and pay back the capital to the self-directed IRA, and then it's just sort of sitting there, and then then there's that little gap. And I think it's a great point that you should be looking at your self-directed investments before they end, and then start challenging your network. Because I always tell people, Clay, your network's your net worth, but it's really important. And I think if you challenge them, like even before it's ending, you should always be communicating anyways, and ask them, do they have another deal ready to go? I know, Clay, like all of my private lenders that I work with through self-directed always ask me, like the minute that I pay them back, they want another deal like lined up like within a week, preferably. So they're asking me, and I think that's a good idea, to keep that investment deal flow moving and keep the high rates of return moving forward on your accounts. I like the fact that you mentioned, we've talked a little bit about syndication. You can invest into a fund, and we talked a little bit about lending. What are some other things you can do with a self-directed IRA?
Well, I think that, if we're going to stick in the kind of the real estate field, real estate itself is such a broad asset class, right? So you can participate either with fee-based ownership. So you could buy a property, and that can be single family, multifamily, commercial, residential, it can be raw land. I know one of my IRA investments is a land speculation deal, so it doesn't have to be necessarily cash producing. And all of those scenarios are where the IRA actually owns the property. The title of the IRA is actually the owner. And then, of course, there's equity and the debt instrument participation as well. So, from my perspective, there are a couple of things to think about in that strategy as well. So some of these are more longer term plays and some
Right.
of them are shorter. Some of them have more participation than others. So almost anybody can be invested in quote unquote real estate. It really is the nature of that participation, I think, that starts to get refined over time. What do you like? What do you feel comfortable with? And I'll say this too, Jim, and I'm sure that you've encountered this as well. Somebody's comfort, an investor's comfort in the due diligence process of an investment really comes into play, because people start to become very refined judgers of what's a good investment in their wheelhouse. And that's a great talent to have, and a great talent to have, connections with people in a network that have that talent. So even the due diligence consideration starts to become a part of what's most comfortable for you as an investor. But from a real estate perspective, the structure and the types of things that you can get into are really varied. So construction loans, bridge loans, you can even do mortgage style loans if you wanted to.
Mm-hmm.
And then the syndication part obviously gives you access to all kinds of assets in terms of the size of them. Is it an office building? Is it self-storage? People are talking, there's a lot of talk these days about mobile homes and self-storage as kind of survivors of this coronavirus kind of situation. So, keeping track of all those things can sound a little daunting, but putting it in the package that you're familiar with, I think is really,
and some people think there's going to be great opportunities with hotels. Other people think that there'll be some opportunities in multifamily. We don't really know. We don't have that crystal ball, but now's the time to sort of get everything. I think we talked about it before we hit record, but to get yourself positioned, to get yourself ready right now, because I think at some point in the near future, there will be really great opportunities. And the neat thing is, like you mentioned, all these different asset classes: self-storage, single family, multifamily. You can do townhomes, you can do condos, mobile homes on land, mobile home parks. Commercial, I think, is going to take a hit. I think there'll be opportunities there. And you can either if you have enough money in your IRA, you could just buy assets outright, or else you could creatively structure with seller financing. It could be debt finance, it could be equity finance, it could be subject to deals, and a lot of different things.
Yes. And I'll say, unfortunately, the circumstances have meant that you are not employed at a company that you had a 401k with, then that means that 401k money now is available to be rolled over without tax and without penalty to be put into position at a self-directed IRA, whether that's traditional or Roth or even SEP or simple or any of those things. So to put that money in a position in an account that can invest in the asset class and the particular investment type that you want. I think that the circumstance, while that's a very somber topic, the opportunity is created by that separation of employment. And, if that is something that you can kind of take the hit and get ready for the next chapter, then this is a real opportunity to put that money in position where you're going to use it to deploy it the best next time.
So let's talk about that a little bit, because there's a lot of real estate investors that have W-2 jobs or W-2 income that could be in that position. If somebody wanted to take money from Vanguard or Fidelity or wherever it was at and move it over to Advanta, how does that process work? Do they go to your website and get it going? Do they call, or how do they do it?
Yeah, it's really pretty easy. So you could actually initiate the process right on the website, advantaira.com. Certainly you can get in contact with me and I can help you run scenarios and get you started with the paperwork. or just give us a call. And, there's always somebody, a person who can educate you and also help you with the mechanics of it. But the process is really easy. You open up an account at Advanta. So then you have a vehicle for the money. You move the money in via rollover, or if it's from another IRA, obviously a transfer, or if you're eligible to make contributions, or all three of those. So you gather the money in that account, and then it's ready to be invested in whatever it is that you choose. So then the process just becomes choosing the investment and making the closing documents for whatever that is, whatever that looks like, and dispersing the money to start the investment.
Okay, and does that typically, I mean, it depends, I guess, on where the money is coming from and how it's flowing, but is that like a typically average, like 30-day process, or how long does it typically take?
Yeah, I would say that it really does vary. The resigning custodian or the resigning 401k plan has some power in terms of when the money actually gets moved.
Yeah.
There are ways to make everything go faster. Wires are obviously faster than checks, things like that. I would say that you're looking at a minimum of a week average, and
Okay.
it's not uncommon for it to be 2 or 3 weeks as well.
Okay.
And therein again lies the thought process of, hey, it's going to take a little time to get the money in position. Maybe I can do that ahead of time so that I can pounce on a deal, because closing a deal can be quite quick. Next day, couple days, that kind of thing.
Okay, so now they've got the money at Advanta. It was a 401k. They lost their job, which is unfortunate. They've moved the money over to Advanta. They're already doing some investments. They actually have more time on their hands now than they used to. And they identify, just a basic duplex or single family home that they want to buy. Say it's 150,000, it'll rent for a couple thousand a month. And they want to go ahead and buy that. How does that process work with Advanta? You guys have like an investment, like paperwork that you fill out?
We do. So finding the deal is with your regular real estate team. So we don't have a ton to do with that. Other than that, please, make sure that you understand what the titling of your IRA is, because even the offer needs to be made in the name of the IRA. So
how would that work with Advanta? So it would be like John Smith, FBO. How would you do it?
Right. It's usually a custodian first. So Advanta IRA, FBO for benefit of the account holder's name,
Right.
and then the account type and number if you have it.
Okay. So it's pretty easy. So you do the offer that way.
Yes.
And then that, of course, sets up the deed and everything else that you need, your homeowner's insurance and so on. And then you just send that information over to Advanta.
Well, you'd certainly be in contact with our transactions folks as you go. So once you've made an offer and it's been accepted, it's important to get that offer to us so that we can start the paperwork. And it's really just two things. It's regular closing documents to buy a real estate asset, of course. And then there's a form of ours that is just indicating your intention and direction to have money dispersed from your IRA to close that deal. So we'll be working on those two lines of paperwork throughout the closing process. And then at closing, it's basically, we send the document. Advanta is actually the signer for your IRA. So the signing trail is a little bit different. Goes to the account holder first, and then comes to Advanta for final signature, because an IRA is in a lot of ways a trust in your name. So as the custodian, we're actually the signers. So the final paperwork, closing paperwork, comes to us last, and we have your permission at that point, written permission to sign that on behalf of your IRA, and also disperse funds from your IRA cash position, and those go to the closing, and then your IRA starts its journey of owning that property.
So now, okay, so now the investor owns it. Actually, the IRA owns it. And then it needs a little bit of fix up. So how would they handle the fix up, the utilities, and then the management once they get ready to rent it?
Right. I think it's not a bad analogy to think of your IRA as a remote control version of yourself as an investor.
I like it.
So it does have its own name and its own bank account. So it is at arm's length from you, but you are calling all those shots. So at that point, you would find the vendors that you wanted to do the fix up. You certainly contract an insurance company for your insurance needs and decide the levels and all that kind of thing. But you run that operation exactly like you would outside of your IRA. It's just that you need to have the include the custodian, because the cash that's going to be dispersed for those services actually comes from the IRA. But of course, the IRA is also going to receive the rents and proceeds from sale if that's what happens. So it is again, it's almost a little autonomous, remote control investor that you're running over there. And it disperses funds and it receives funds, and it's able to act in the investment community just almost the same way as you would outside. It's just you involve the custodian because that's where the money is.
So during the rehab, if you're using a guy and say it's John Smith Contracting, you could work back through your team and just cut a check direct to John Smith?
Correct. So the cash position and the IRA is all you do really is just indicate, and you can do it online with us. So
nice.
Indicate that John Smith needs X number of dollars for whatever the service was, and we send the check out for free.
Okay, nice. So then you get it rented, and you're going to have typically a property manager, right? That's best for an IRA.
It's a strategy decision. A lot of people use managers. You don't have to necessarily, but a lot of people do.
And then let's say you do or you don't. So basically the rent goes to Advanta. So would you ask your tenants to pay a check to you guys, or how do you handle it? What's the easiest way for a landlord to handle that?
Yeah, well, let's take both of those scenarios. If the IRA contracts with a property manager, then the tenants would actually send the check usually to the property manager, right? Property manager takes their fee out. They probably hold some money for incidental bills, and then they send whatever's left back to the IRA. So that would be the cash flow for that situation.
That's the easier one, I think.
And I would say from a management standpoint, there's a lot more flexibility in terms of the speed of cash handling that it happens with a property manager. If you do not have a property manager, yes, the renters actually write the check, and it's made out to that same name of your IRA, and it would come directly to Advanta and be deposited into your cash position.
Okay. And I think I wanted to go through that so people could see that it's pretty easy. So like if you start off with a syndication, and then maybe you'll do a private money loan for 6 months or whatever, and then maybe you find something on your own. I want people to know, like, your IRA can own assets, and they can participate in the cash flow, which is a nice monthly dividend, and then the upside equity. You can get some really great returns just buying and holding on to some property. So I'm glad you went through that. It's not difficult, is it, Clay?
It really isn't. I think it's difficult if you had to try to do it by yourself, which I think is a reason to have a custodian that's accessible to you. Because really what the account holder needs to bring is their judgment about the investment itself and the strategy for how they're going to handle it. But after that, you can really ask your custodian or me, or to say, okay, this is what I want to do. How do I do it?
I think when I first started learning about this, I learned one of the people was Dyke Spotiford in Atlanta.
Sure.
And that was like 10 years ago. And I had this misconception that it was going to be super complicated. Like, because when I was in corporate America, it was stock, bonds, mutual funds, that's it. And
Sure.
when I started hearing like, you can do what you know best, which is real estate, I'm like, it's got to be complicated. Then when I dug in, it was like, no, it's not hard at all.
Right. And you're basically taking the concepts that you already know about real estate and just kind of having your IRA participate in those same things. So it just takes a little bit of adjustment in your mindset, but the mechanics are not difficult.
All right, and give us your contact info for the Advanta and stuff one more time, Clay, and we'll wrap this up.
Sure. The website is advantaira.com, of course. The office number here is 470-695-0620. If you want to contact me directly, even just ask questions, I'm happy to answer any questions that you have. That would be cmalcolm, CMALCOLM, at advantaira.com. And so you can either find us on the web, give us a call, email, and we're happy to give you information about scenarios or IRS rules or anything that you feel like you have a desire to understand. We're happy to provide that for you.
Yeah, I mean, for all of our success listeners today, I mean, I've known Clay a long time. He was on my podcast a few years ago. He's been doing this a very long time. So he's very experienced and a great resource. Clay, it was really great to catch up with you today.
It's good talking to you, Jim.
Congrats on being back over in Atlanta and all the investments that you're doing in your IRA as well.
Yeah, thank you. It's an exciting time.
All right, thanks everybody. And for everybody who shares this, leaves us comments, reviews, and all that, you guys are all success rock stars, and we appreciate you very much. And reach out to Advanta IRA, get that going, and get some great investments for your future. Your family and yourself deserve it, and your legacy in the future deserve it very much. See you guys later.